Good morning, everybody. Hey, hope your day is off to a great start. Welcome to Wednesday, March 4th. Hey, yesterday was another crummy day on Wall Street, but it looks like today maybe we got a big bounce coming. We had treasuries, the Fed dropped interest rates yesterday unexpectedly. So, hey, we'll have to see what things kind of work out today as Dave and I talk about that. But I do want to remind you, look, did you make any tweaks in your portfolio? Did your advisor make any tweaks in their portfolio? Now's the time to be looking at those type of things. How much risk do you have? All the volatility, is it time to take some risk off the table? Man, if you are in that retirement danger zone, it surely is. Give us a call at 863-382-0037 to schedule your no obligation financial x-ray. That's 863-382-0037. Hey, hang tight. We'll be right back with you.
Point on Light FM. As Billy Joel there. Good morning. I'm Morning Dave. We're at 8:40 here, 20 before 9. Time to check in and find out what's going on with your money, because about 80 different things all happened at once over the last 24 hours. And, well, down yesterday, up today. We're starting to get a rhythm going on. Let's go check in with Phillip Statler from Statler Financial Services and get his take on the mess that is Wall Street these days. Phillip's here, and you're at home this morning. It was kind of foggy to start out with, right, Phillip?
Yeah, it was very foggy, so I decided I'd wait it out a little bit and let it lift, and so didn't want to rush in and not be able to get to the office in time. So, but hey, welcome to the roller coaster, Dave.
Oh, Lordy, my head was spinning. Bring everybody up to date that was busy watching the Super Tuesday ramp up yesterday. During the day yesterday, Chairman Paulson from the Federal Reserve made a phone call, got agreement from his fellow governors to unilaterally drop that controlling Fed interest rate, not down by 0.25%, but down by a full 0.5%. And that was, that starts communicating crisis level to the markets. Markets responded with what you'd expect immediately by going up by about 400 points, and then turned around, shrugged, and said, well, this wasn't very bright, and we ended up down dang near 800 points yesterday, even with an interest rate cut. You'd almost think they were listening to us saying, guys, this isn't very smart.
Well, yeah, I think the market was listening to us. Obviously, the Fed wasn't listening to us, were they?
Obviously not. I mean, 0.5 point, too. I mean, I could have almost understood 0.25 point, because that's an elbow in the ribs type thing. 0.5 point is like taking a baseball bat and hitting you on the butt.
Yeah, I was listening to one of the Fed governors, and she said, because they asked her that question, why the half versus the quarter? She said, we wanted to make a statement.
They did.
Well, they did. They wasted one of their bullets, I think.
Yeah, they made a dumb statement, but they made a statement. And Leah, like you say, and you and I have been preaching this for a long time. A recession, whether you want to like it or not, it's overdue by a little bit. At some point in time, the Federal Reserve is going to have to stimulate the economy because of economic reasons, and the normal way to do that without having to go to contortions like Bernanke had to during the Great Recession is to drop interest rates, because that tends to stimulate markets. Well, doggone it all, you get down to 1% interest rates, we ain't got far to go without starting to talk like the Europeans and get negative interest rates if we get into some real deep doo-doo.
Well, that's true, Dave. And so that's the concern, that we're in right now, because we're seeing a huge bounce today. So that's why I said it's a roller coaster. I mean, we were up huge on Monday, down on Tuesday. Now it looks like we're heading up today significantly. A lot of that, they say, is because of the whole Super Tuesday outcome yesterday, giving some certainty.
Yeah, the thing that you and I have always said is markets do not like uncertainty. And coming out of Super Tuesday, it looks, at the very least, like Joe Biden's got the inside track to be the front runner for the Democratic nomination. And like I said, they don't like uncertainty. Can you think of anything more certain than to have the incumbent running against a guy that's basically lived and done policy in Washington for a half a century? have a sneaking hunch if it continues to go this way, politics are not going to be a big mover and shaker on the markets for the foreseeable future if it looks that way continuing through the conventions.
Yeah, I'm not so sure either. But hey, with the coronavirus, who needs politics?
Well, you got a point there. The epidemiology update for the day, by the way, the last update I had was 93,455 cases of coronavirus confirmed worldwide, 3,198 deaths. We did have one in this country already. We're up to, I think, a total of 40 in this country total, with one more in Florida, but they were able to track that one down to one of the already existent cases. So not a really heavy-duty batch of news from our general part of the country on the coronavirus so far.
No, it's really not. But the other thing we've got to add to that is interest rates. We talked yesterday how they had dropped below 1. Well, yesterday, before the end of the day, they bounced back up above 1. However, and right now, I mean, earlier this morning, they were below 1. So they keep bouncing. Right now, it's a little above 1. But all that to say that mortgage rates have dropped significantly, and they saw a 26% increase in refinance applications for mortgages last week.
You know, I refinanced my mortgage at 3.75% a few years ago. It's now starting to get down to the point where even somebody as low as mine was is getting to be a candidate. I would expect the refinances to go up considerably.
Yeah, it's still not really, I mean, like in your case, not, because they say you need 1 point before you make a refinance because of the cost. And so I don't see us getting down below 3. I mean, because even right now, I looked the other day to see what the 10-year mortgage rate was if somebody wanted to refinance for 10 years. It's still above 3. It's like 3.15.
Oh, even for a really short-term one like 10 years, huh?
Yeah. So it's not. It hasn't dropped below 3 yet.
Yeah, but if you're over 4, people, it's a very little
absolutely.
Something for thinking about. Yeah.
Yep. Start looking.
So looking at the markets this morning, right now it looks like we're going up, a little bloom off the roses. I'm looking at a curve on the futures so far this morning. Have we got any companies telling us how they did last quarter?
Yeah, I've got a couple. So we've got Nordstrom's came out, and Nordstrom's struggled a little bit. They missed by about I think it was 4 or 5 cents a share. Revenue came in below expectations, and so they're getting beat up pretty big this morning. They're down almost 8%.
They're on the top of my big loser list this morning. I figured it had to be bad news.
And then we got Dollar Tree. You know, good old Dollar Tree. It also came in. Well, they beat on earnings, but they are reducing their outlook, which is kind of funny based on what they do. And they missed on revenue. So that's a couple things going against Dollar Tree this morning. They're down about 2.5%.
Could they be one of the supply chain difficulties with China? Because a lot of those
that could be. You're right. I didn't think about that, but let's face it, a lot of that stuff, that's where it comes from.
Yeah, I got to assume that they're going to be one of the coronavirus casualties for supply chain issues.
Yeah, that's very true. Hey, I got one for you. Brown-Forman. And do you know who Brown-Forman is?
Why do I know the name? They're drawing a really loud bell ringing in my head, and I can't remember what they do.
So they're the parent company of Jack Daniels.
That's why the bell's ringing. It's a headache.
Yeah. So they missed by just a little bit, and so they've revised some of their estimates. But so people need to start drinking Jack Daniels, I guess, a little bit more. But they're down almost 3% this morning.
Wow.
Yeah.
Is that I mean, I'm not a whiskey drinker by any measure, but is that competitive issues? Did they say why? I mean, a primo brand name like that.
Yeah, I didn't. They just they revised their full year outlook. Again, global economics and geopolitical environment.
I'm a little bit of a tech geek, but I really don't analyze the alcohol industry. Just get me a bottle of single malt scotch, and I'm happy, and that's about the extent of it. But that's one of those heritage brands you don't expect to do badly. Setting the table for this morning, yesterday, like we said, it was a herky-jerky day, a little bit of euphoria after the interest rate cut, and then we just tanked right back down again. The Dow was down 786 points. NASDAQ was down 268. Ouch, that's almost 3% there. And the Standard & Poor's was down by almost 87, and that was after a half-point interest rate cut. Then we had the Super Tuesday primaries, and everybody said, oh, Washington's going to be real predictable next year no matter what happens. And it brings us up to this morning. How we doing 45 minutes early?
So we're not right now going to make back everything we lost yesterday, but we're definitely trying to get there. So right now we've got the Dow up 631 points, which is a little short of 2.5%. We got the S&P 500 up almost 64 points, which is a little over 2%. We got the NASDAQ up 179, which is a little over 2%. So everything's looking good on that point. The S&P 500 VIX is coming down, which is the volatility indicator. We look at the commodity side of things. We got gold and silver down just a tad, less, 0.25% or less. And then we've got crude oil heading up 2% to $48.12 a barrel right now.
Well, poop. I could live with 48.
Yeah, it's getting closer to 50, you know.
That we don't like. And overseas markets, Asia was mixed this morning. Japan kind of rebounded from a really crummy day yesterday and closed up by a little bit. Hong Kong and the other Asian markets generally off. Europe is looking at our futures and saying, hey, wow, happy days are here again. They're all up this morning, 45 minutes before we start trading. Phillip, advice always needed for making sure that my retirement account stays healthy, even in the face of the upsy downsies we're having these days. How do I get a hold of you to find out how much risk I'm really taking on retirement?
You know, Dave, one of the important things, you know, we've been tweaking since Monday. We've been tweaking portfolios. I think one of the main things people need to ask is, what's your advisor doing? What are you doing for your portfolio? Are you making any changes? If not, maybe you need to get a second opinion on your portfolio. Give us a call for our financial x-ray at 863-382-0037. That's 863-382-0037. And then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings on your sister station, News Talk 730 a.m.
And that's always valuable information. We keep you up to the minute here again tomorrow morning on Light FM. Phillip, thank you so much, and we'll see you then, all right?
All right, man. Have a great day.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Remember, folks, if you're in that danger zone, if you're in that retirement danger zone and you're not sure how much risk you have in your portfolio, give us a call. Let us run you through our financial x-ray. Because like talking to somebody last week, you know, they lost a whole bunch of money in 2008. Now they're 10 years closer to retirement. They're only 4 years out from retirement. They don't want to lose again. Now's the time, if you're in that retirement danger zone, that you get a financial checkup, starting with our x-ray. Do it right now. Call us at 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.